Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Tuesday, September 24th. We are going to take a look at one you are probably very familiar with. You may even have one of their cards in your wallet or purse. Visa, out of the financial sector. Now, before we get too far into the video, if you could do me a huge favor, go ahead and click that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. I do these stock pick of the day videos Monday through Thursday whenever the market's open. I also do a portfolio update video every Sunday morning, as well as some other videos monthly and other videos whenever I'm just interested in a topic. I push those out as well. And thank you to all of the subscribers out there. Really appreciate everything that you guys do, taking the time to watch, comment, like the videos, and subscribing to the channel. You guys are awesome. The channel continues to grow because of people like you. And one last thing, if all of you watching the videos could watch the videos to the end, watch time is another one of the metrics that the YouTube algorithm looks at to push these videos out a little bit further to people. Otherwise, they may not see them. So again, really appreciate everyone out there who's taking the time to do that. Click that thumbs up. Make sure you're subscribed. Click that notification bell. Drop a comment down below. Let me know what you think of Visa. Do you use their cards? Is it one you are investing in, or are you waiting for a pullback? Would love to hear from you in the comment section below. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in adding it to my watch list. Thousands of companies out there. This gives me a quick criteria basis that I've set to kind of give me an idea if I want to do more of a deep dive into the financials of the company and see if I am interested in doing further review and possibly investing. This is a financial company, so we will add in price to book. It must meet 6 of 9. For companies outside the financial sector, we don't use price to book. You can use price to book for any company, just outside of the financial company or outside of the financial sector for companies like banks and this one here. Make sure you are comparing price to book to other companies in the same sector that create similar products. Now back to Visa. Check them out on their homepage, usa.visa.com. That's usa.visa.com. That is their homepage where I pulled this information from. Our journey begins in 1958, the year that Bank of America launched the first consumer credit card program in the U.S. We expanded internationally in 1974 and introduced the debit card in 1975. In 2007, regional businesses around the world were merged to form Visa Inc. And in 2008, the company went public in one of the largest IPOs in history. Today, we operate in more than 200 countries and territories with products and services available on cards, laptops, tablets, mobile devices, and more. We continue to evolve, but our purpose remains the same: to uplift everyone everywhere by being the best way to pay and be paid. So again, you can see here back in 1958, Bank of America started the Bank Americard. That's where they got their start. Then Visa is born. They became their own entity in 1976. And as they say, the rest is history. Transforming transactions, we see huge growth opportunities in the world of payments and accelerating our efforts to convert $18 trillion in consumer spending from cash and checks to digital payments. And obviously that's what their bread and butter is, digital payments. Our network of networks approach creates opportunities to enable digital payments for consumers, businesses, and governments around the world by facilitating person-to-person, business-to-customer, business-to-business, business-to-business, I don't know, it must be big business to small business, and government-to-consumer or government-to-customer payments, supporting your business, so not only individuals but also businesses as well. Go and check out their homepage if you want to know more about this company, but again, you're probably well aware of what they do. You may even use a Visa credit or debit card to make your purchases. Now, the reason we were taking a look at them, down 5.43% on the day, big drop on the day, and part of that is some negative news. Apparently, the United States government is going after them for being a monopolistic company around their debit cards. So more to come on that. Obviously, there will be a lawsuit pending. We'll have to see how that one shakes out. Never good whenever companies are in lawsuits, but eventually, if you're a large enough company, you're probably going to be hit with a lawsuit. Now, they did close out the day at $272.94. We are talking about Visa Incorporated, ticker V, out of the financial sector. 52-week range as low as $227.78, as high as $293.07. They are closer to their 52-week high than their 52-week low. Market cap of $531.116 billion, so a large cap company here. Beta of 0.96, just slightly less volatile than the overall market. PE ratio $29, price to earnings ratio $29.19 per share here. A little high for what my liking is. I usually like in the high teens for a company like this, though. If this company is growing fast enough, something in the 20s, even the 30s might be acceptable, but it's got to be growing significant earnings to justify such a high PE. Earnings per share, EPS, extremely high, $9.35 per share. Earnings date coming up sometime between October 22nd to October 28th, so tune back in if you're interested in an earnings call. Forward dividend, $2.08 paid out on the year. They are a quarterly payer. We'll see that here in a little bit, with a starting dividend yield very low at 0.72%. Ex-dividend date August 9th. Looks like they paid out on September 3rd. So kudos to you out there who just received your dividend payments earlier this month. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information, $307.46 per share. So they actually see it setting a new 52-week high over the next year here. We're going to jump over to the right and look at dividend yield theory. To do that, we take a look at their 5-year dividend yield average of 0.66%. Compare it to their current 0.72, or over here where it says forward, 0.72. And since the current dividend yield of 0.72 is higher than their 5-year average, that speaks to some potential undervaluation on this one. Payout ratio extremely low at 21.52%, so a lot of room. I like under 75% for a payout ratio, so a very good metric there. That means they have a lot of room to continue to increase this dividend over time. Definitely not in jeopardy of having a dividend cut here. Now, as you can see here, we did add in price to book, and as you can see at 14.66, this does not meet the one that you typically look at for banks. And you can also see that another way to use price to book is the current 14.66 is much higher than any time over the last year, right? Going back to June of 2023, you can hear 12.81, 12.2 in September here, December 13.3. So they are actually the most expensive they've been in a little over the last year. If you were picking them back up here in June and through September, that was a much cheaper time to be picking up this company. That's another way you can use price to book, right? Now, dropping down to free cash flow, I like growing free cash flow because typically if a company has growing free cash flow, they will grow that dividend as well. It also ensures that they are financially secure. They're able to pay down debt, make acquisitions, reinvest back into the company, buy back shares, increase their dividends over time. So going back to 2021 here, you can see free cash flow of $14.5 billion, 2022 up to $17.8 billion, 2023 up to $19.6 billion, trailing 12 months 18.9. Nice, steady free cash flow growth. I do like to see that. Repurchase of capital shares as well. Very significant repurchases of their own shares, and that is increasing as well. So nice growing free cash flow. That's what you want to see, a nice stair step up over time, as well as the increases in repurchase of capital shares as well. So very good growth here in free cash flow. Now we jump over to stockanalysis.com. This is another source that I like to go to. The previous source was Yahoo Finance. You can pick any sources that you like. I just recommend more than one so you can make sure the information you are getting is accurate and up to date. Stockanalysis.com has 26 analysts that have taken a look at this. They call it a consensus buy with a low estimate of $266. That would be a 2.57% decrease from where it currently sits. Average estimate of $309.65. That would be a 13.42% increase. That's pretty close to what we saw with Yahoo Finance on the previous page as well. And if it happened to hit their high of $330, that would be a 20.87% increase. All the while, you could collect that 0.7% dividend yield. Jumping into statistics, I like to look at return on equity and return on invested capital to see how well a company is reinvesting its capital back into itself, making acquisitions, repurchasing shares, reinvesting into the company, that sort of thing. I like 10% or better for both of these metrics. Return on equity sitting at 48.55%, smoking high, very good. Return on invested capital, same thing, 24.38, very good, over twice what I'm looking for here. So very good numbers in return on equity and return on invested capital. And for earnings per share growth, I like 5% or better projected over the next 5 years. Again, 16.06. Very, very good numbers overall for this company. That is very good. A little over three times what I'm looking for at 5% forecasted growth. So currently sitting at 16.06. Really like the overall numbers on this one. Just wish it was a little bit cheaper. Now we're going to look at dividend history here. They are a quarterly payer. Payout ratio, as we said, in the 20s, 22.26. Nice dividend growth here, 15.56%. I don't know how long they're going to maintain double-digit dividend growth, but that is nice to see. 16 years of dividend growth, buyback yield of 2.54% in the positive. We like that. Shareholder yield of 3.29%. We like that as well. And going back to February 2022, you can see here 37 cents in the fractions of a penny. November 2022, they raised it up to 45 cents. Raised it up again in November 2023 up to 52 cents. And I would anticipate another raise in November coming up here to maintain this dividend growth here. Good numbers overall. So back to the screener here, understand the business. That's where we started. Check there. Growing free cash flow. Yep, check there. Growing dividend. Check there. Dividend payout ratio is under 75%. Check there. Dividend yield theory says it's potentially undervalued, so check there. It is not within 15% of a 52-week low, and it is not in my portfolio, so it can't be below my cost basis, so no check there. Return on invested capital and return on equity both well above 10%. Check there. Earnings per share growth over 5%. Check there. So overall, this one gets a lot of green. 1, 2, 3, 4, 5, 6, 7 of 9. We did not get price to book. It was at 15, so it was not under 1 here to be fair valued as far as financial. Just a rule of thumb for financial companies, 1 is fair valued, anything under 1. And that really goes for banks, but I like to add it in for other ones. And I like to show you how you can use price to book, not just for valuation against other companies in similar sectors, but also a valuation against itself, right? Current valuation on this one, price to book says it's a little pricey compared to where it's been over the last year. Well, that is it for this one. Let me know what you think of Visa in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. And drop a comment down below. Let me know what you think. Like I said, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of Visa. Is it in your portfolio? Do you use their cards? Are you looking to buy? Have you been buying? I see a lot of dividend investors out there buying it right now. So let me know what you think of Visa down in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Visa you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section. I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Always seek the advice and counsel of a certified financial advisor.